What's going on, you guys? Matt Snus, the Realtor here, coming at you again with another video. This one is a special one for me. I got the opportunity to interview a loan officer, someone who I know personally and someone who is awesome professionally. I hope you guys stay tuned and watch the whole thing. If you have any questions, comments, concerns, whatever it is, drop them in the comment section down below. And her information for you to get in touch with her to get the process started for you is in the description. Again, give me a like, comment, follow, subscribe, all the YouTube algorithm stuff, you know the deal. And I hope you enjoy. This is a good one, and there's tons of information. If you don't catch something on the first round, go back, watch it again, and of course, always know that you can reach out to me and we'll get you squared away. Let's go. How's it going, you guys? Matt Snus, the Realtor with EXP. Today I wanted to bring a special guest on, someone who is very near and dear to my heart, and someone who's also in the real estate business. She's not a realtor, she is a loan officer. Is that correct? A loan officer. And I just want to say thank you very much for coming on and
thank you.
Taking this meeting with me.
Thanks for giving me the opportunity to speak with you and your circle of people out there. I'm honored to be a part of the team, which is what it is. It's a team effort. Whenever you're coming alongside a realtor, a title company, appraisers, there's a lot of services that happen in a transaction. And so surrounding yourself with people that you can trust to guide you, to lead you into what is going to be the best for the situation. So my job as a loan officer is to qualify these folks, give them many options. It's hard when you walk into a bank and you're offered one set of guidelines, one set of loan options, one set of rates, and you're just wondering out there what else is out there. You know, there's a lot of opportunity for them to shop around, but it takes time, it takes energy, and then sometimes you just get overwhelmed. There's so many questions and details that my job is to come alongside my clients and work for them. I don't work for a bank, I don't work for a lender, I don't work for a specific loan product or rate. I work for my clients. And I find that in the broker world, that is the best way to customize what is best for the client. I have a relationship with lots of lenders across the country that I send business to, but my interest is to take care of my client first and foremost. And so my paycheck isn't impacted by which lender we're using or which rate. My job is to take care of clients and to give them options, to educate them. So educating is a passion of mine. I want my clients to trust me to provide them the information that they need to then make a good financial decision for them. So I don't steer them into anything. I don't make decisions for them, but I equip them with the information that they need to then make the good decision for themselves.
Good. That all sounds awesome. It seems like there's probably quite a bit to unpack there, especially for somebody who maybe doesn't understand all the terms or like what the next step is, or maybe some of the differences between, you mentioned that you're a broker, and we'll get into the differences in a minute. But first, before all that, can you tell me a little bit about yourself, Jeree Tomasi?
Yes.
And who you are as a person, and kind of just talk about that a little bit.
Sure. Thanks for asking that question. So I'm a wife, a mom, and a grandma. And that family is a passion of mine as well. Taking care of my family. I just have this overwhelming desire to come alongside people and help out whenever I can. And so that's carried into my profession, my career of being a loan officer. I've been in the business for over 30 years. I started as a banker, learned the ropes on the secondary market, what they do with loans after they've closed, and then I went into the broker world. I love being a broker because there's so many opportunities to really dig down deep and find the best of the best for my clients. There are a lot of different scenarios out there that clients need. Not everybody fits into a box. And there are a lot of lending opportunities out there. One lender might really cater to the veteran population. Some like to really help out those first-time home buyers, and so they're going to be really competitive with those guidelines and rates. And I need to know that. I need to know what my lenders are offering, the lenders that I've signed up with. And so so I first take application. I get to know my client, get to know what their goals and their objectives are. And then through the loan application, I find out just, where's your assets coming from? How's your credit? Sometimes there's a need to improve credit before we can take that next step of actually shopping for a house.
Okay.
And so I work with my realtors to let them know where in the process this client might be. They might need to be building some credit or repairing some credit before it's time to go shopping. That's the fun part.
Yep.
But the not so fun part is living within your means and making sure that that financial decision that you're going to make on this huge purchase of yours is actually going to be a good financial decision. So
real quick, let me ask you about, so you said that you're a broker. What are the differences between yourself and, say, somebody else who, if I wanted to go work at, my local bank or someone that I've been banking with for a long time, and they offer or they're offering me special programs perhaps because I've been banking with them for a while. What's the difference between somebody who works at the bank versus someone like yourself? You said you're a broker. You're not confined to one box, one lender, one set of products. Can you kind of describe a little bit about the difference?
Sure, that's a good question. Thank you. So bankers have, like I said, their set of guidelines, their margins that they need to make on every transaction. They also do car loans and CDs and checking and savings accounts. And so, they're into a lot of different financial areas. I deal with wholesale brokers, lenders on that side, that offer wholesale rates and fees. That's all they do. And they do them well. And so wholesale versus retail, you know the difference. They don't have to come here and set up shop like banks do and credit unions do and have that overhead, so then they have to make more on each loan product to overcome their expenses. So on the wholesale channel is what we call it, the wholesale lenders offer us the best rates in the nation, and then I get to pass that on to my clients.
So are these wholesale lenders, are they banks? Are they special lending institutions? Are they hedge funds? Are they individual parties with tons of money?
They're corporate.
Corporate,
They are corporate, but all they do is mortgages.
Mortgages, okay.
Yeah, there might be a bank out there. There's a few that have bank in their name, but all they're doing is lending on mortgages.
Okay.
That's their whole focus on the wholesale lending side. So there are standard FHA guidelines, VA guidelines, conventional guidelines. Everybody underwrites to those guidelines, right? So we all provide the same level of products out there, so to speak. But each lender, this is kind of an unknown secret out there, each lender has their own what's called overlays. So lender A might have an overlay to go credit scores down to a lower than lender B. So I need to know that. And then this week lender A might have a really great rate for first-time home buyers, but next week lender B will. And of course we don't know that in the future.
Right.
So I don't choose a lender in our initial conversation. I help my clients shop for the rate and the lender we're going to end up using once they're under contract.
Okay.
Because the prices of the interest rates vary daily, as you know, just like the stock market.
Okay. Good. Good to know. It's good to keep. So you're having to keep up with that information with
Correct.
all these, various institutions that are lending, that you're able to connect with. So you're on top of your game, having to.
And it's ever changing.
Right.
Yeah.
Right. Okay. So your mortgages, is there do you stick with just conventional, just FHA? Do you do conventional VA, FHA? Do you do new builds? What's your?
I do them all.
What's your scope?
I do them all.
You do them all.
Yeah.
Okay.
USDA, that's rural, and also is called Section 184, which is lending to the Native American community. So there's special products for that.
Oh, wow.
New construction loans. home equity lines. A number of my lenders have started coming back with their home equity lines. You can always get them at your local bank or credit union, but these wholesale lenders are now getting in that game too. So
what does that look like? What does a home equity line look like for you?
It is a second mortgage. It's put behind your first mortgage, and it accesses the equity in your existing home for various reasons. You could just want to set it up so that it's an emergency fund.
Sure.
You might want to be in the process of purchasing another property, and you want to access that equity to then have the down payment and cash for the next purchase. You might want to do home improvements. There's a lot of reasons to do a home equity loan.
Okay. So good. So if I have anybody that's interested in any type of loan product, or maybe they have a specific need like an FHA, you can do that as well as the next guy who comes in needing, say, a conventional loan product.
Absolutely. And I always do a side-by-side comparison between the conventional and FHA to make sure. There are some lenders out there that really like to sell the FHA product, even if it might not be what's best for the client. Conventional is the premium product for various reasons. Not everybody can qualify for them. And so FHA is always a good backup. It's necessary in some cases, but a lot of bankers get paid more in their paycheck to get that FHA loan.
Okay.
That's not what's best for the client always. And so I will always do a side-by-side comparison so that my client can see on paper the differences, and then they can make the decision of which loan product they want to go into.
Okay.
I get asked a lot, what would you do? And I tell them what I would do. Or if this was my daughter's loan or my son's loan, this is what I would advise. But there's really no right or wrong answer. It's what are you comfortable with?
I got you. Okay. Now, in on the realtor side of things, there's things that I can and can't say. For example, I can't tell you to buy or to not buy in a specific area. Correct. Or something. There's a lot of housing laws that are associated with that.
It's called redlining. So not allowed.
Not allowed. So is there anything from the lender side that you can and can't say, or maybe is illegal, or?
Oh, that's a good question. I've never been asked that. To be honest, I just have to be honest with my clients. I can't steer them into a product. I can't say, here, this is what's best for you, when it's really not. And so there's a lot of regulation that came into the lending world after the 2008-2009 mortgage disaster, and the Dodd-Frank Act came into play, and it's taken the industry 10-15 years to figure out what all that interpretation means. It was a bumpy road at the very beginning because of one lender would interpret a guideline this way and another one would interpret it a different way. And so because I work with so many different lenders, there wasn't one set of rules.
Right.
You know, if I work for Bank of America, everybody knows and they get their education, and that's how it is. But lender A over here might interpret a guideline and a regulation differently. So that's given everybody some pause and some confusion. My job is to know what lenders offer what,
right?
So that to clear up some confusion. So I can't steer them into products, steer them into a specific interest rate just to better my position. It's got to be all about the consumer. The consumers are well informed these days, so that there's no room for the excuse of I didn't know. We have to let them know, and it's an overabundance of information. It can be overwhelming, but we have to let them know all across the transaction, every fee that changes, every product guideline that changes. We have to keep disclosing and redisclosing, and there are things put in place to make sure that the consumer is well informed.
Good. So I know from the realtor side of things, and quick side note here, I'm obligated as a licensed realtor in the state of New Mexico to provide my fiduciary duties, the utmost care, all of our conversations are confidential. I mean, we are talking about people's personal
Sure.
information, sensitive information, like say financial status, or what it is that they're kind of working with. Do mortgage brokers like yourself, are you held to those kind of standards, or is that just something that you take on?
It's an ethical practice that I do, absolutely. I work with the realtor, but I don't tell the realtor everything about every applicant.
Right.
I don't talk to them about their credit or where their money's coming from or assets or anything, unless the borrower tells me you can discuss my situation with my realtor. I'm happy for that to happen. But I need to give the realtor enough information that they know where the buyer stands. Does this buyer have money to put down a substantial down payment, or are they first-time home buyer with very minimal down payment? The realtor needs to know that information.
Right.
And so I do share, we're working toward an FHA product, or they qualify for VA, so we'll be doing VA financing. The realtors need to know that, because the seller eventually needs to know what kind of financing the buyer's going to get.
Good. And with that, do you work on pre-qualification? Actually, can you explain to the audience a little bit of the differences between the pre-qualification, pre-approval, and just maybe some benefits?
So when I do an application, I talk to them about all those things we talked about earlier, but then we talk about credit. I try and run a soft credit if we're not ready to actually start purchasing next week. But we do need to look at credit. We have to see where that stands. Everybody wants to protect their credit pulls. Don't pull my credit. Well, this is the time and place we get to pull it.
Right.
We have to know. And credit pulls don't ding your credit. It's the subsequent pulls. If you just keep pulling and pulling and pulling, then those credit inquiries that do show up will start dinging the score a little bit. But, I mean, if you're a strong candidate, if you've got good credit, you shouldn't be worried about a mortgage lender pulling your credit to see if you can qualify for a loan that you're going to get in the near future.
Right.
So the credit reports are good for 90 days anyway. So we do that, and then we run that application through an automated underwriting system that everybody uses. It's the same algorithm across the country, based on conventional guidelines or FHA guidelines or VA guidelines. And so it actually looks at all the data points, looks at the credit report, and then it'll tell us an approval or a referral or a caution because something's not quite meeting the guideline. So I need to know what's preventing this person from getting that pre-approval. I'll go back. A pre-qualification is just kind of looking it over, running a few calculations. Yep, you qualify. A pre-approval is actually running it through that automated system.
Gotcha.
And we actually have that approval in hand that we can send to a lender and say, we got a pre-approval. Here's all the conditions that the pre-approval requires, and if we can meet those conditions, then you'll fund the loan. And every lender wants to see that. They want to see the approval, and they want to see the conditions that meet the approval.
Good. And so you would definitely suggest doing all that prior to looking for a home.
At the very least, the pre-qualification. Now, in my conversation with my client, I can pretty much gauge if we've got to do that credit pull right away. If they're looking to start making offers, I always have eyes on their pay stubs. That's very important, because if I ask you how much you make, you're going to give me a number, but I need to see it on paper, because your number and my number might be different. Not that you're not being truthful with me, but you might be thinking after taxes, whereas I get to use before taxes.
Oh, okay.
If you're self-employed, you might be thinking, well, on my gross sales, I do 100,000. Yeah, but what's the bottom line net profit? Mm-hmm. And so it's that kind of eyes on that I really need to have to make sure that when we get into underwriting, we're not up against an obstacle that I should have known before we got to underwriting.
Right.
Before you started making offers. Because we don't want you to make offers and then not be able to follow through with
that.
it.
Yeah. Okay.
And I do have pretty much 100% pull through.
Good.
So if I say you can qualify, there's not been a time when underwriters said, nope, they don't qualify.
Well, that's good. That's a good statistic to have, I would say.
Yeah.
So, all right. that's all great information. Now walk me through, let's say I'm a first-time home buyer, or I want to be a first-time home buyer. I don't know the first thing, where to go. I'm looking on Zillow. I think I know what I can afford, but I really have no idea. What's next? What's next for me?
In that application process, I will ask you, how much do you want to spend every month on your house payment? That is a very important question. Not how much do you want to spend on a house. That's different. A sales price is different than what your monthly payment is. And so that is where the rubber meets the road. That is where somebody who tells me, I just want to spend $1,000 a month, but I'm looking at $350,000 houses and I have 5% down. So I have to kind of bring things into perspective of what reality is going to translate to. Rates have gone higher than they were for a while, for a long time. And so people got really interested in buying a lot of house for a very little bit of monthly payment, and that's not the case anymore.
Right.
Those rates really are impacting that monthly payment. So I just have to kind of bring the reality picture into perspective and say, if you want to spend $1,000 a month, then this is what your mortgage loan has to be, and then you can back into that sales price with however much money you want to bring into the table. That's fine, but I can only lend you this much to keep you at that mortgage payment.
Gotcha. Okay. So now I've got in contact with you. I've submitted at least at bare minimum some of the basic information requirements for you to get me pre-qualified. Now it's home shopping time.
Yep.
Okay. So now goes back to me. I go with the understanding of how much house we're looking to purchase. So, and for me, kind of to caveat on what she was saying, is if you have $200,000 in the bank, but you want your payment to be only $1,000, well, that means that your house, you're probably looking at maybe $350,000, $400,000 house at that point, and that's mortgage, your PITI, principal, interest, taxes, and insurance. That's not including your HOA fees.
Right.
If you are in a flood zone, which here in New Mexico we don't have a whole lot of that.
Not a ton of it, but there are some out there.
There are some out there, and then you start getting into various other things that go on that get tacked down to that, and that is your at the end of the day how much you're paying to live in a specific property. But so either way, we'll get that big picture. I'll say, okay, this is what we're looking for in terms of home buying. We go out and look for a home. All right, Jeree, this is it. My clients found the perfect home. They want to offer this much, and we want to close in 45 days. What are you expecting from the realtor at that point?
Okay, so what I can provide is a pre-qualification letter that can accompany that offer that tells the seller this is a serious buyer. They've gone through the not so fun part of doing the financing. They know what their budget is. They're qualified. Somebody's actually looked at all the things that need to be looked at, and then I offer you the pre-qual letter. Once we have a signed offer, you come back to me with that signed offer, and we start looking at lenders at that point to see who we're going to place this client with that is going to have the best rates and fees in that lock period. Because if we have 45 days, then I look at all the lenders' 45-day lock pricing.
Okay.
And they're going to vary. Every lender has a varied price because they each want to make a different margin.
Right.
And so I'm going to find who's got the lowest for that 45-day lock period, and that's the lender we'll go with.
Okay. So then you find the lender, and now we've got the process started on actually purchasing the home. Today we're not going to talk about inspections or anything like that, but next step is the appraisal, correct?
Appraisal.
Okay, so what do you need? How does the appraisal get started? Who has to order it? How do we get that moving?
So I have a processing team behind me that picks up all the detail work that has to happen. We order the appraisal, we order the title binder, we talk to our clients about getting homeowners insurance. All those things will take us through the 30 to 45 day. I can usually close a loan in 14 to 21 days.
Oh, wow.
Yeah, it's a pretty fast process. as long as the client responds timely to requests, as long as inspections don't hold up anything or repairs. But we do order the appraisal once the disclosures I told you about, all that information that the borrowers get. They'll initially get inundated with paperwork that says, here's everything you need to know, and a lot of stuff you really never wanted to know about the loan process. And but they will be informed about the costs, the estimated costs, because that's what everybody wants to know. How much is this going to cost me? How much do I have to spend at closing?
Right.
Because it's not just the down payment. Down payment is one bucket of money. Closing costs are the other bucket of money. And you, as a realtor, get to use your expertise and negotiating skills to have the buyer and the seller come to an agreement on that. You're advocating for your buyer. The listing realtor is advocating for the seller. But at the end of the day, there's fair buyer-seller splits on those closing costs. So that's an additional cost on top of the down payment. And a lot of clients don't understand that. The first-timers don't quite understand. They think you can get as little as 3% down on a conventional loan. So I just have to have 3% in the bank. Not so, unless the seller's going to pay all your closing costs.
Right.
And in this market, that's not happening.
In this market, not in this market, it's not. Actually, can you talk about what the appraisal is? Who exactly is it that does the appraisal? Because I don't. Okay. As I'm the realtor, I don't do the appraisal. Do you do the appraisal?
Absolutely.
So who does the appraisal, and what is it that they're doing?
So there's home inspectors that go in and flip on lights and turn on faucets and look at age of equipment. An appraiser is going to look at the overall condition of the house, the amenities in the house, and compare it to sales of the like property of that house, and say, well, other people have bought this similar type of home for this amount of money, so I would value this house at X amount of money. The appraisal process has changed dramatically since the old days, where I could just call up an appraiser and say, hey, I got an appraisal I want you to do. I would, of course, pick the best appraisers that have the quickest turnaround time, the fairest cost, that were on the money. They didn't overestimate or underestimate. They were fair. Unfortunately, not everybody operated that way. And so we got into that was part of the mortgage mess, as well as some unscrupulous things were happening. So a process was put in place. It's called appraisal management companies. There's a third party that gets to step in. And I don't get to pick an appraisal management company, and I don't get to pick an appraiser. But appraisers sign up with these appraisal management companies, and it's on a rotation type of basis, so it's very random. And I place an order with the appraisal management company that the lenders are using, and most lenders use 2 or 3 different AMCs, we call them, appraisal management companies. So I place the order with them, and then they look at the order and they kind of put it out to bid to all these appraisers that are signed up with them, and it gets assigned to an appraiser, and that's the appraiser that goes out and does the inspection and returns the report. I don't even know who the appraiser is. I cannot talk to the appraiser about value. There's no undue influence on that value. You can't talk to the appraiser as far as value. They might call you to set up the appointment to get the inspection done, but you can't talk to them about any comps they're going to use, anything. So we want to make sure that value is very pure and is very objective, and nobody has influenced it to make a deal work when it really shouldn't have appraised for that.
Right.
And then somebody's buying too high. Now what I'm seeing, and I can tell you in this market, I'm seeing a lot of houses being sold for higher than appraised value. And that's simply because of the inventory. Yeah. There's not enough inventory out there.
Right. So what happens, is there any bearing or effect on, say the purchase price is $400,000 and the appraisal comes in at $425,000? Is there any bearing on the loan process with you, the clients, anything like that?
Good question. How we determine loan to value, which is the big number, if you're putting 5% down, your loan to value is 95%, because we're loaning you 95% of the value, the sales price of the house. You're coming in with the 5%. The lender's giving you 95%. So that loan to value is determined based on the lower of the sales price or the appraised value.
Okay.
Lower of. And so if you're going to have an appraised value that's higher than, Lenders are great. They're fine with that. If the value comes in lower than the loan amount, then we now have to go off of the lower value, lower than the sales price. Then we have to go off of the appraised value to determine the loan to value. So if you were going to have a 5% down loan, and now we have taken off 5% of that sales price because the value's lower, you're now at 100% on your loan amount. The lender's not going to lend you 100%. You've got to lower the loan amount to meet guidelines. And there's different guidelines out there based on the product. There are first-time home buyer loans out there that are 0 down.
Wow.
So it's called down payment assistance. Mm-hmm. You're going to pay for it in interest rate, though.
Okay.
If you want a lender to lend you 100%, you're going to pay for it in interest rate. That's fine. That's one way to get into a house, right?
Sure. Yeah.
Why not? And we've got different criteria, different options on that down payment assistance portion of the loan that, I just lay them all out. Which one do you want to take? And I just closed one a couple of weeks ago, and they were very grateful to get into a loan. They did have to pay their closing costs, but they didn't have to come in with that $5,000, $10,000, $20,000 down.
Good. Okay. So you basically, what I keep hearing over and over is that you have a bunch of tools.
Lots of tools.
A bunch of tools that you can attack any situation at any time with the right mindset, the right wisdom and experience. Because you don't want to hammer in a wood screw and a piece of plastic. Like it's not everything's the same.
Right.
Have you ever seen any two deals exactly the same?
There are some pretty standard deals. Somebody has W-2 income, cash in the bank, credit's excellent. Those deals go by very quickly. We can close those loans very quickly. It's the customers that have little assets. We're trying to find assets to support the financial closing costs and down payment. Gifts are used a lot. Gifts from a family member.
Can you explain a little bit about what a gift is?
So a gift can be given to any buyer that it's an outright gift. The donor will sign a letter that says there is no repayment required, and they can give their son, daughter, nephew, niece, whoever, grandson, even spouses, if they're not on the loan but they have an asset, or actually more like a partner or unmarried domestic partnership. That can still be a form of gift as well. Even an employer can give a gift.
Really?
I haven't seen that in my career. I have not seen an employer give a gift for a down payment, but that's an acceptable source.
Oh, wow.
Yeah.
Okay.
And so it's just, you need $10,000 to close this deal. Here's $2,000 to help you along. I have had people have wedding funds that, from all those generous guests that provided them cash, and lenders don't like to see cash deposits going in, large cash deposits. We have to source everything. So I advise clients, let's get your money in the bank. We need it seasoned for 2 months. After 2 months, it's really yours. There's no large deposits. We're good. But, once in a while, we have these weddings, and a large chunk of money just got deposited with all these different sources, and that's acceptable. We would have to show a wedding announcement to prove that this actually was a marriage that did happen.
That did in fact happen.
Yes.
You're not getting married every couple of years.
No, yeah.
Yeah. Okay.
So there are ways around
that's
that.
Interesting.
Graduations. A large graduation gift. Yep.
Very cool.
Yeah.
Very cool. Now with the actually, let's get back on track to the loan process or the home purchase process. Mm-hmm. So the appraisal comes back and everything's fine. It appraises appropriately according to the purchase agreement or the listing amount. What's next?
Well, at that point, we hopefully have gotten all of the conditions that were required. The asset verification, the employment verification, credit report's already in, got your appraisal in. We're ready to close.
Ready to close?
You might not be ready. There might still be inspections or repairs being done. Mm-hmm. There might be some negotiating still going on after inspections came back. Mm-hmm. So I'm waiting, at that point, I'm waiting for you all to tell me, are we going to wait till closing date, or do you want to move it up? I have been moving up closing dates right and left this whole year.
So at that point, basically, you're done for the most part. What happens if I say, Jeree, my clients, everyone's agreed to instead of closing on the 20th, let's close on the 15th. What do I need to do with you? Do I just call you and say that?
Just call me and let me know. There is something called the closing disclosure. That is like I told you, there's regulations in place. That is one of the timed benchmarks that has to happen, milestones, I should say.
All right, can you describe a little bit about you're talking about the 3-day prior to closing that has to be, there's no way around it.
Right.
There's no way to waiver that in any possible way. What is that called again?
It's called the closing disclosure.
Closing disclosure.
And there's a
okay.
3-day wait period once it's been released to the buyer and they've signed it or opened up the email to show it's been reviewed. It's not the final numbers. It's not that everything's done at that point, but that has to be released and seen by the borrower at least 3 days before closing.
Okay.
Again, the consumers need to know. They don't want to be surprised at closing. I don't want to be surprised at closing when I purchase. So I make sure that they are informed all along the way. And then the closing disclosure is, we're getting close to the final number. And so here's how things have played out. Because it takes time in that 30-day period to get your insurance back, find out what the title fees are, find out what that repair is going to be and who agreed to pay for it, and all those things that go on those final numbers.
Okay, good. And so at that point, now here is closing day. Is there what are you doing with the client, or there's some work with the title company?
Yes, the title company is very important. Their very important role is they're the escrow company that holds the monies and makes sure it gets received from all the parties that it's supposed to be received from and dispersed to all the parties that it's supposed to be dispersed to. And so they're very instrumental in not only ensuring that you have clear title. There's no encumbrances on the title. You're getting a house that nobody can come back later and say, that's my grandfather's house, you have to give it back. They have done the research to confirm that you're getting clear title, and they ensure that. That's part of their job. But they also gather all the numbers, they look at the contract to see who agreed to pay for what, and then they facilitate taking the closing documents and having both parties sign and then transferring the money accordingly. And so I make sure that that closing disclosure is accurate to the penny, and it is to the penny. That everything that my client agreed to pay for, they're paying for, and they're not paying for a penny more. And so I see that way before closing. And then they come to closing with their cashier's check or their wire transfer, and they're done. But all along the way, the disclosure process helps them understand you're going to see these forms again, and you're going to sign them all at closing. So they're not, again, hit with brand new information.
Right.
They're just signing, yes, this application is true and correct now. Yes, nobody's forced me into going to a certain homeowner's insurance agent or forced me into a certain loan product that I didn't know I was getting into, or what the mortgage is all about. The title company is very good at explaining every single document. I try and attend my closings. I can't always be there because I'm back at the office working on all those details that get you to the closing table.
Right.
And structuring loans and all of those things on the very front end to make sure that they're getting the best deal. But by the end of the closing, there shouldn't be any surprises and any questions, really. But there have been times when, if I haven't attended a closing and there's a question, a title officer will call me up. Jeree, my client's got a question, and we'll deal with it that way. So
okay, good.
I feel comfortable walking out.
So would you say after closing day, is there anything special, or is your job done at that point?
I like to call myself your lender for life.
Okay.
What that means to me is I'm there if you get a flyer, a mailer that says I owe the IRS a bunch of money because of my mortgage, and you don't know what that is all about, and you call me up a year later and says, Jeree, I got this. I have this happen to me quite frequently. The tax bill came out. I don't understand this. Can you explain this? I want to be a resource for them, not just now, but in the future. And I do that by building a relationship, being that trusted resource for them. And so, hopefully in the future, if you need a house, you'll remember me. You'll remember the service that I provided to you. You'll refer your coworkers, your kids, grandkids as they grow. I just want to be there. I've been in this business long enough to know that it's hard to find someone when you're dealing with finances that you can trust.
Right.
And I want to be that person. I don't want to have any question that I provided what you needed to get you to the financial goal that you want.
Of course.
It's all about my client,
right.
And I want to be part of the team. So I'm glad to be that resource now and in the future.
Good, that's great. Is there anything that you would say to not do during the home purchasing?
You betcha.
Should I go out and buy a celebratory car? On congratulations to my new house.
Okay, so there's like a 10 commandments of do's and don'ts.
Okay.
Keep your job. Try not to
keep your job.
Try not to change jobs in as wait till the loan process is over and you've got the keys to your house. Then you can do whatever you want. Go buy that Maserati. But no, do not buy a new car. Do not open a credit account. It doesn't mean you can't go buy a refrigerator for the new house that you're going to move into, or furniture. It just means don't go to Best Buy and open up an account that you didn't already have before you started this process. There's a thing called debt monitoring that lenders do during the process of a loan. Once they get it, they'll start a debt monitoring service, and if a credit inquiry pops in, they'll know. If Best Buy pulled your credit to see if they want to give you that credit card, my lender will know, and then we'll have to explain it, and we'll have to say, did you open up a new card? Do you have a new debt that I now need to add into your debt to income ratio? It's not a deal breaker by any means.
Okay.
But it can complicate things, and it causes more paper trail. We paper trail everything. We got to see money moving. We got to see where the money is, and if it's moving from account to account, and we have to see where your income's coming from. So again, if there's a credit, something's happening with your credit, since that credit report was pulled, we'll know. And then we have to deal with it.
Gotcha. Okay. So don't buy a new car.
Don't buy a new car.
Okay. I'll wait then.
Yeah.
Yeah.
You can buy an engagement ring as long as you already had that account.
Okay.
But not in the middle of.
Not in the middle of it.
Unless your new payment added into your debt to income ratio still keeps you qualifying. Because you never know when that $30 monthly payment's going to tip you over guidelines, and now you don't qualify.
Yeah, that could be a game changer right there.
Yeah.
Yeah, and not in a good way. Yeah.
No, I don't want to make that phone call.
No, I can imagine.
And if it's bad news, like something popped in and we're having to deal with some issues, I'm not going to send an email to you. I will call you, and we will discuss it. Nobody wants to hear bad news, but sometimes they need to hear it, and what's the best way to do it? But the best form of communication, in my opinion, is a phone call.
At minimum.
Yes.
Yeah.
I deal well with texts and emails. I'm very available to my clients on weekends and evenings, holidays, because as you know, real estate happens 24/7.
Sure does. It sure does. So okay, so that brings me to my next question. Something good or bad, something comes up. Now, once you've got your client, you're working on their file and pulling credit and all that fun stuff. At that point, do you get everything started and you pass it to maybe an associate or like one of your office personnel, or are you personally dealing with every single thing, or?
I used to, when I wasn't more in demand. I used to take it from A to Z and everything in between. I now have a staff that helps me, support staff that helps me. I have an assistant processor that once I have that credit, once I have the application, then she starts communicating with them about, we need your documents, here's a Dropbox links to upload them securely. But she's always in communication with me about, okay, go look at the pay stubs, they submitted them. I'll go look at the pay stubs, I'll do the analysis. I'll give her direction on, okay, we need some more of this, or I'll just call my client and tell them what we need. But we build the file, and now we're ready to go get a house, and then we have a purchase contract. Once we have that purchase contract, I give it back to her, and she will do the processing part of it, getting it ready for underwriting submission, getting it ready for disclosures. I take care of picking the lender, doing that part of the loan structuring as I work with my clients, getting the loan locked in, on the pricing of all of that. If there's points that come with it, I discuss that with clients. So that's my baby. But the day-to-day details of ordering things and receiving documents and organizing, I have a support staff to do that. But I am informed all along the way. I am copied on every email. I have hundreds of emails a day that I go through every single day. And then when we get near closing, that I'm looking at all that closing disclosure, I'm looking to make sure we're going to meet those deadlines. Making sure my support staff is truly supporting and not falling behind. If there's something that they've got a roadblock, they call me and say, we've got this underwriting condition I don't understand. I don't know how we can meet. I jump in there and talk to underwriters. So my hands are on everything throughout the process, but I'm not doing every single little thing.
Gotcha.
I just don't have that time and eight hands to do all the things that happen on every single deal, because there's a lot of stuff.
right. And unfortunately, we have to sleep sometimes.
I do.
Hang out with our family.
And I do have family.
Yeah, exactly.
that I try and spend time with. And then at the end, we also have a closer, dedicated closer, who just manages the closing.
Okay.
And so once it's cleared to close, my processor hands it off to the closer, and she's responsible for dealing with the title company, getting all the numbers in place, making sure everything's ready to go for closing, and the documents are delivered to title in time.
Good.
Yeah.
So I want to switch gears a little bit. You're from Albuquerque, New Mexico?
I am a native of Albuquerque.
Native Albuquerque, New Mexican.
Go Eagles.
The
Eldorado
Eagles. Eldorado Eagles. So would you say that your primary focus is New Mexicans or people in Albuquerque? Do you work outside the state? Do you?
I'm licensed in New Mexico. My company is licensed in Colorado and Texas as well.
Okay.
So I can still do loans with them, with those different states.
Okay.
The licensing criteria is just a little bit different, but because our company is licensed, I can still handle those loans as well.
Nice.
I just work with a licensed loan officer that has a license in those states.
Gotcha.
I'm working towards those licensures, but it takes time and energy, and I'm so focused on taking care of my clients now that I haven't taken the time to
It's
get
hard to
licensed.
step away from that, and I totally understand.
Oh my, yes.
So what would you say is a staple of New Mexican food that if anybody was interested in coming here, moving here, what's your number one go-to food?
My favorite is called a naked Rieno at El Patron. So the Rieno, as you know, is a green chili that's stuffed with cheese, and it's dipped in the batter and fried. So I don't do the battered and fried part of it. I just get the freshly roasted, peeled, warm, with all the green chili and red chili sauce, rice and beans. That is my favorite.
That sounds so good.
Yeah.
Red or green?
Both. Called
Both.
Christmas.
Christmas. Okay. Okay. Christmas. Well, I think that this has been an incredible interview. I know I've learned a little bit here, and I'm sure everybody out there can absorb so much. There's so much to take in. Feel free to go back and watch this again if we missed something. In the event somebody wants to reach out to you, contact you, they're interested in your services, or even just hey, maybe my credit isn't so good.
Yeah.
How could they reach you to find out more?
Yeah, and we didn't really touch on credit, but as you know, credit is everything in the lending world. You're asking an institution to give you money, and they're saying how you have to prove your trustworthiness, and the way they do that is through the credits. And I have tricks and tools to help people build up their credit in a short amount of time. A lot of people out there say, I don't want a credit card, I don't want to get in debt, and that's great. Having a credit card doesn't mean you have to be in debt.
Correct.
It means you know how to use credit wisely, and it's a convenience. Credit should be a convenience for you, not because I don't have the money, I'm going to borrow it on a credit card. Because that's what a credit card holding balances over means, is you're borrowing money at high rate of interest.
Very high interest rate.
So I look at credit reports all the time and help them restructure, help them build, help them, and if there's a point where there's some derogatories on there, then I have a credit repair professional that does not charge by the month, because those monthly charge credit repair places are not working in your behalf. They want that money every month. So they're going to take a year and they're just going to send out a bunch of letters. That's not credit repair. You and I can do that.
Right. Right.
This is a true credit repair person who just charges a flat rate and helps them get where they need to be. And he's very, very good. He's been in the industry for over 30 years as well.
Good.
And so credit's very important. So we can help you repair, build, whatever we need to. I can be reached. I have a website. It's just my name, JereeTomasi.com, and it's spelled JereeTomasi.com. Just has a quick bio about me, a few reviews out there, and then it has an apply now link, and there's an application. You can go online and do an online application. My phone number, 505-249-0002. And my email is Jeree, Jeree, @comcast.net.
Perfect. I'll be sure to get all that information, put it in the description to everywhere that I put this on the internet, and hopefully we can drum up some business. So please reach out to Jeree. Obviously, she's a wealth of knowledge and information. Just lean on her expertise, and just know that you're going to be in really, really good hands. So, again, Jeree, thank you so much for having me interview you today, and
Thank you.
learned a lot of stuff. So,
yeah.
all right, thank you.
All right.
Take care.